Let's talk about it further with our featured guest of the morning, Barry Schwartz, Chief Investment Officer and Portfolio Manager at Baskin Wealth Management. Barry, thanks for coming in.
Thanks for having me, Paul.
I'll just tell viewers what's going, the latest developments. As we said earlier, just this morning, the Canadian Federation of Independent Business says that a 25% tariff on Canadian products being shipped into the United States, quote, would likely drive inflation in Canada, causing price hikes and loss of customers, and heavily affect small and medium-sized businesses already struggling with weak demand. And we've had other forecasts as well. What we do know as well is that Canada has done its best to get ready. The Canadian government, according to Bloomberg News, has drawn up a list of $150 billion worth of U.S. manufactured items that it would hit with tariffs if Trump follows through on his threat. And there's been some speculation that he may do so as early as Monday, his first day in office. And just to put that into context, this would be similar to what Canada did when Trump put tariffs on Canadian aluminum and steel during his first administration. Canada drew up a long list of U.S. products and did apply tariffs to those products in a retaliatory move. How concerned are you, Barry, about the near-term future of the Canadian economy given this threat?
I'm very concerned, and everybody should be, because it's a wild card and we just don't know. I'm hopeful that, I think it's a done deal that there will be tariffs. Let's not debate that, but I'm just hopeful that it will be similar to what happened in 2016, the first time around, when there were small tariffs applied to specific Canadian goods. Many manufacturers who produce goods, if there's a 25% tariff, they'll be out of business, or their products, no one will be buying their products in the U.S. So this is a race to the bottom. I don't think Canada should be, doing the nuclear option of saying we're not going to send you oil or gas or electricity. That doesn't work. So hopefully there will be a period where Trump will get his little win in, and then we'll move on from there.
Do you think the threat of a Canadian recession is real?
The threat of a Canadian recession is very real, of course. But that's the sad thing, is right now things are looking really good for the Canadian economy. The unemployment situation improving, the fact that interest rates have been cut, very helpful. The fact that the U.S. economy, here's the rub, the U.S. economy is doing terrific, very strong results. We're the biggest trading partner, Canada, 70% of our exports. We want to benefit right now, and there's good vibes in the U.S. Corporate profits are strong, deregulation is happening, tax cuts. That's going to be very, very good for us. So maybe we might have to take a little bit of pain for Trump to get his win, so to speak, based on his campaign promises. But I think that ultimately better days lie ahead for Canada.
Are there publicly traded companies that would suffer, Canadian publicly traded companies?
Magna, NFI, New Flyer, those type of names, companies that make specific products that sell exclusively into the U.S., big problems.
What do you think of the Canadian response as we understand it so far?
Who's making these decisions right now? Do we have a finance minister? Do we have a prime minister? It's very tough to understand who has thought through all the ins and outs of the situation in terms of what to apply. We have a lot of provinces not agreeing on what Alberta doesn't want to shut off the oil. So it's a bad situation.